Now, you might find yourself as an investor that has a lot of limited partnership interests. Sometimes people call these syndication investments because you're placing money in somebody else's deal and you have what's known as a limited partnership interest in that other person's LLC, right? So this is something that you'll find is very typical for people that want to be deploying money into real estate but don't have the time or the inclination to be able to vet deals on their own. So it's easy just to push money into other people's deals. We call these people syndication investors, and there's some key things that you need to know about to be able to protect yourself as a syndication investor. And let me show you about that right now. So the one thing that you want to make sure that you never do is own assets inside of your personal name. So what we do is that what we form is a Series LLC for the syndication investor. And inside of the Series LLC, we're able to keep cash, stocks, and anything else that doesn't have individual liability attached to it can be stored right up here at the parent level of the Series LLC. Now, this parent company can form an infinite number of what's called child series. Now, child series is free to create and it's infinitely scalable. Just like actual parents, they can create as many children as they want to for free. Same thing happens here with the Series LLC. Now, each individual child series is treated as if it were its own company for all liability purposes. So what that means is that you're able to take each asset and compartmentalize every single asset or every single syndication investment that you make underneath a child series. Now, best of all, you're actually able to make this an anonymous structure. So if you want to be placing money in multiple investments, but you don't want everybody to know what are the extent of the investments that you have out there, you can actually structure that through using an anonymous Series LLC for that purpose. Now, what's the great part about this? Each new investment that you make, you simply create a new child series, and then you simply move each asset underneath each individual child series. Now, this Series LLC is where all of the money comes back into. The net effect of this is that you're able to keep all of your cash inside of one bank account that has one EIN number. If you're an individual or married couple, a lot of times this is treated as for pass-through tax treatment and just reported on the Schedule E of your personal return. And all you have to do have income and expense tracking through your accounting software, whether that's QuickBooks, Excel spreadsheet, whatever the case may be. And you get to have all of the ease of operations. So as you acquire new investments that you want to make, you simply deploy the money out of the Series LLC, you make the investment at this level inside of the child series, the asset, all of the money gets paid back out from the investment to your Series LLC. Your Series LLC then distributes the money to you at the end of each year, and you simply report it onto the Schedule E of your personal return. Great, guys. Infinite scalability, simplistic banking, the same type of accounting that you'd be doing anyway. And if anything happens to any of these assets, you'll only lose that one asset. You won't lose any of the other assets. So you're able to sleep easy at night, knowing that even if the worst case scenario happens, you're gonna be fine. Hey, thanks for watching this video. If you want more high quality content just like this, you can find it here on our YouTube channel or go into our website, royallegalsolutions.com. We have a ton of free content from our blogs, our videos, the podcasts that I have been featured on. Whatever question you have, we're gonna have it there for you.